Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary, and thank you so much for joining us. We have a lot to get into today. So there's kind of a lot going on considering that this is such a short trading week. Obviously, markets were closed on Monday, and so we've seen kind of just a little bit of increased volatility in the market. You know, we've been saying for weeks that market was overvalued and markets can't just go straight up. That doesn't happen. We typically go up and then we see a little bit of a period of cooling off, and then we see the markets that then can typically then recover. So markets yesterday did retreat from all-time highs. Nothing crazy. S&P 500 was down just over 0.6%. Today we're kind of seeing that pullback continue. We're down a little more than that today, maybe closer to 1% as of right now as we're recording this. Again, nothing to be concerned about. And that's really what I do at least want to show you for now is what do the technicals kind of say about what we're seeing. And we've been saying, again, for weeks and even months, that markets have been kind of overvalued and definitely due for a pullback. And we had seen pullbacks in September and October. And then it was kind of like the market just said, okay, never mind. And then just kind of continued on. So we've really had a lot of kind of like pent-up steam that needs to be worked out, and that is typically worked out one of two ways. Either we see some pullbacks in the short term, or we kind of trade sideways and don't make a whole lot of effort or progress, I should say. I lost my train of thought there for a second. And so what I'd like to do right now is kind of show you kind of where we're sitting right now with the technicals of the S&P, and then kind of break it down with some specific areas of the market that we have positions in and kind of what we're seeing. Obviously, I'm not sure if part of this pullback has to do with just kind of the chaos that weather has been unleashing in the country. You know, Texas right now has just been completely crippled with just having major power sources just completely paralyzed at this point. So we are definitely seeing parts of the country right now that are being affected, that are now not able to be productive, at least in the short term. And so that could have markets feeling a little skittish right now, as well as, you know, as we've been saying, COVID cases rising. We're seeing some of these other mutated strains kind of making their way in. Things that we knew, but now that they're actually here, and so markets could be hesitating, or it could really just be that it doesn't matter what's in the headlines and we were just kind of due to kind of cool off for a little bit. So here is year-to-date technical chart of the S&P 500. And so you can see that even though, you know, back 2 weeks ago, this is where we came down, we'd hit the 50-day moving average. We literally sat on it, bounced off, and then we've had a nice recovery since then. So we haven't really gone a whole big way within the S&P 500. We've kind of traded sideways. We've made a little bit of advance here. Now, again, we did see we're in the midst kind of this pullback right now. And so something to be interesting, though. So RSI, really not a whole lot to talk about right now. RSI has just really been hovering here in the mid-60s. So a little overextended, but, you know, once we get into that 70 range, that's typically where it's not sustainable for too long, but we really have been kind of trending on this line, not going a whole lot. So here, this is where we're at. Clearly, though, we are very deviated from our longer moving average. Here's our 200-day. And so remember, moving averages, they act like magnets, and eventually they will have to kind of meet somewhere in the middle. So either some of our valuations and some of these broad indexes are going to have to come down, or then over time we'll be able to kind of correct over. But these are really significantly deviated. So I would not be surprised if in the short term we saw kind of a stronger pullback happen. February historically is a weaker month for the market to begin with, and so while that has not necessarily been true these first couple of trading days of the month, that's typically, though, we do see weakness and increased volatility, and so there's still a lot of month left. So it would not be at all within the realms of reality for us to kind of see a 3 to 5% pullback. I think, honestly, at this point, with some of the advances that the market has made, it would actually probably be a healthy move for the market. So we'll just have to see. What I wanted to show you here, this is just kind of going back now 6 months, just to kind of show you, because sometimes it's almost like we forget what corrections and pullbacks feel like, because in the midst of them, they kind of like, they feel really painful. Well, remember back in September, we had a significant correction here. Then we had a run up, then another correction, then in October. And really since then, it's kind of been a pretty crazy advance up. Now here's that correction that we just saw 2 weeks ago where I said we sat on the 50-day that acted perfectly like a line of support like we would expect, and then we kind of bounced off and kept on moving up. So just to kind of show you that it's almost like we forget sometimes what a correction feels like, and then when we're in it. And again, as you can see though, now RSI was significantly extended here, which is really was kind of like the triggering point here of that first correction back in September. We're not quite there right now. We've really been quite stable, kind of hovering in the mid 60s here. So again, just things that we watch. Will there be for sure a correction this month? I'm not sure. It's very possible that, like I said, we could trade sideways for, you know, a week or two, work off some of that pent-up steam, and then be able to go on to take on new highs again. We could see a short-term correction. Like I said, 3 to 5% at this point would not be completely unexpected. So we're just going to have to go ahead and watch. Now, what I did kind of want to show you though, so you know we talk a lot about our specific, the way that we invest. So this is like a constant, I'm constantly saying the same thing. We use relative strength and we use positive and negative momentum to show us where we should be invested. Areas of positive momentum are the areas that we want to kind of over allocate towards, and we want to avoid the areas of negative momentum, those areas that are beginning to kind of fall off of strength and movement, because that will probably be laggards, and kind of it's a great way of identifying winners and losers. And so just to kind of show you, so over the past 3 months, S&P 500 has had a return of about 8.8%, so not too bad. The tactical model, which right now is 100% in equities that are only in those areas of most positive relative strength and highest momentum, over that same time period is up about 19%. So pretty significant difference. That's the idea though, when we're able to kind of avoid the laggards in those areas of weakness and make sure that we're in areas of strength. And then over 6 months, very close. And so, and you can see certainly recently it's been quite a significant change. And this is when we kind of finished adding in the rest of our allocations back in December. So over 6 months, tactical models up about 25% versus the S&P 500, which is up just over 17%. So again, over the long run, this is how this works. Find the areas that are going to work for you and not against you, over allocate in them. So last thing that we're going to talk about today, I kind of wanted to get into the program that we use. Every now and then I do this just to kind of show you. I think it's helpful for you to kind of see the process that we go through. And so we're in the midst of seeing some of our funds cool off just a bit. And so what does that mean? So as an advisor, as an investment manager, should I be concerned about what I'm seeing in terms of movements? And again, these price movements that we've seen over the past couple of days have been nothing really to be worrisome. These are normal movements, but I just kind of want to show you what we would do even if this was a more significant movement. So right now our small cap fund is up 15% for the year. Okay, so right away that tells us, I mean, this has made a pretty strong advance already in just a very short period of time. So then how do we gauge, is this area that we're in, is this still a strong area, or do we need to consider like moving out of small cap growth and looking into somewhere else? Well, we know that the current score is a 5.78. Best score you can have for an ETF is a 6, so that's a pretty good score. Average small cap score is only a 4.76. So this small cap growth fund is actually outperforming its peer by over 1 point, which is a big deal considering that they only go up to 6. So we know that in terms of the trend, it's a positive trend. You want to see that the movement is going positive and it's not trending in a negative fashion. It's on a buy signal. It's in a column of X's. Remember, we've talked about this before. X's only mean that prices are rising. So demand is in control and not supply, because if this was in O's, it would mean that prices are beginning to fall. They're trending lower, and we can see that with supply and demand, that supply has taken over when we're in O's. But we're in X's. Now, weekly overbought, oversold, 114%. So that tells us that in the short term, this fund is pretty overextended. There's there's a lot of activity. People really are going into this fund, and we've seen a quick advance. And so at 114% overbought, we can expect that it's likely that in the short term we could see a pullback. So that is kind of like expected when we see that. We typically overbought, oversold anything over 75%. Now, we won't ever change positions because of overbought, oversold, but we just kind of know this fund's really kind of advanced. Same idea when we talk about the markets needing to release that. They need to kind of find a way to get rid of that steam, either by trading sideways or having short-term corrections. Overbought, oversold is a way for us to look at that from the fund level or the asset class level and kind of know, has this area made too much of an advance quickly, and could we see maybe a cooling off period? And then, so far so good. And then we just take a look here at the actual chart. And all I'm going to show you is that, as you can see, we've just continued to add X's, which means that the price movement has continued to rise. And as if prices were falling and not just like noise in the market, because what this does is this eliminates the noise of like the daily changes plus and minus. That's okay. We're going to see changes, right? Because we know that funds, first of all, don't always go straight up, and that changes and variations are normal. What we want to know, though, is has the trend changed? And we figure out if the trend has changed by determining if prices are falling and will likely continue to fall. So right now they're in X's. So this fund remains a very strong fund, a good contender that we should probably continue to keep in our lineup. And so this is just one of the areas that we use as number one, is we're choosing funds and then determining if they're still appropriate to be there. That is, this is just one of the exercises we do. There's 6 tests that we go through. So over the course of the next few months, we'll be showing you some of those different things that we look at as well. But this one is it's helpful to be able to see this graph. So I thought that I would show that to you today. And then so finally, I just want to really encourage you that if you have questions, I'd really like to hear from you about the topics that you want to hear about. I'm going to keep talking about the market and the different things that we're using within our investment strategy. And certainly as things are changing and if we need to start shifting as a result of relative strength and momentum, I'm going to bring you that information as soon as it comes. But I also want to be able to begin talking to you about other topics. And so I'd really love to hear from you as the viewers, because I know that I hear from you each week about different things. So I really want to start hearing your thoughts about what can I cover next for you. As always, if you have questions, I'm always happy to take your call. Maybe you're not sure about the model that you have, or you're not really sure maybe about what the current philosophy is behind your asset allocations, and I'd love to try to help unpack that with you. So that is all that we were going to get into for today. If you are in one of the parts of the country right now that is being affected by just this these cold and winter storms we're having, I pray that you remain safe and your family remains safe, and we look forward certainly to seeing you all next week. Thank you so much. Have a great week.